Right across Sydney, agents are reporting huge numbers at open houses. We're going to talk about why. Stay tuned.
I'm the ringleader, so listen up.
Good morning.
Hey,
How you going?
yeah, nice, really nice. How are you going?
I'm doing well. Open houses, big numbers. It's all the talk of the town at the moment.
It must be weird for buyers to hear what they've heard in the last 6 months, 3 months, year in the media, and then go to open houses and see 20, 30, 40 people at an open house, and you're going, I thought the interest rates were high and people were being freaked out. Why are there so many people here?
Yeah, a couple of months ago, I heard that the market's crashing still. Why is lots of people out and looking? It's really, really interesting. And I think for a lot of people, it actually perplexes me sometimes how all the buyers seem to know that let's all not turn up these weekends and then let's all start turning up now. It's like everyone in isolation who's not in contact with each other somehow knows that, okay, let's all rock up all at the exact same time. And there doesn't seem to be any fundamental change in terms of some new news article in the media or anything like that before it all started happening. It was literally like a light bulb.
And it's amazing, like when you're talking about fundamental changes, I keep looking at, I'm thinking, have interest rates gone down? No. Are they still, forecast to potentially go up in the short term? Yeah. Like the only thing that's actually really changed from 6 months ago to 3 months ago to now is that people are getting in some suburbs as much as 20% off.
Yeah.
And I guess when you're taking on a 30-year mortgage, that's significant. Like that is, you're gonna, that discount that you're getting. So for instance, DY has done negative, depending on which reports you look at negative 16% to negative 19% over a 12-month period. When you buy that property, even though you're on a higher interest rate, you're paying your mortgage is 20% less than what it would have been.
The debt you're paying off is still a lot less. So yes, you're paying more interest on it. The total amount of principal debt you're paying off is a lot less than you would have been paying off 12 months ago. And also the biggest thing as well, and I think this shocked a lot of people, is the low level of stock. I think that is the biggest thing that has genuinely perplexed people, where they go, interest rates are going up, there's going to be all the distress selling, there's going to be a flood of properties on the market, and literally every month for the past 12 months, everyone's been predicting, next month, that's when all the stock's going to come on. Towards the end of next year, that's when the stock's going to come in. Okay, January, New Year, that's when all the stock's going to come on. And it's never seemed to hit. And I think, and this is only my opinion of it, I think people sort of didn't take into account that everyone wanted to say how bad of a financial situation that everyone was in. But obviously when it all hit the ceiling with it, you can see that a lot of people are happy just to hold on. And I think that's what's really started pushing this sort of swing now, why there's so many people coming through. As you said, buyers are getting now a massive discount and vendors are just choosing to hold on to their properties.
And something that makes me think is it, what was that? Was that Highway Patrol?
I think so.
That sounds impressive. Is it herd mentality? Do you know what I mean? Or is it factual that everyone's individually feeling these feelings to compel them to buy? Because sometimes you think when that herd mentality, when everyone starts running left, everyone runs left. And I don't know if that's the case or if people are genuinely doing their maths. Scarcity, what you've mentioned, huge one. I've got a client, Adam, that I sold a unit for 6 months ago. And Clients can, I think people have felt a little bit predatory. They've thought, we'll just wait, like you said, we'll just wait until these people need to sell, and then there was less and less and less properties. Adam's an example where we sold his unit 6 months ago. I talk with him probably every 10 days, and he's like, any more houses coming on? Got anything coming on? Houses coming on? Can't see any houses around. What's coming on? Is it coming on after Christmas? Is it coming on after Easter? Is it coming on after the elections? And there's just no stock.
Yeah. And this is a thing, and at least I should put it here as well. Mortgage cliff never happened. I think a lot of people were waiting for that mortgage cliff with it. And there's a lot of people coming off fixed interest rates as well. But we've already started to see that trickle in with the majority of mortgage holders at the moment are already running on these higher interest rates. And there still seems to be no massive amounts of distress selling. So I think we speculated before, but now when all the sort of facts are rolling through, and what the future holds, no one knows, but we can see it now. And like you said before, Mark, is it herd mentality? I think it's a bit of both. I think people, and I was saying it to people a couple of months ago, I'm going, guys, you're getting a 20% discount on your price now. It's the Northern Beaches. It's a blue chip area. It's not like we're going to drop 50%. And if we are going to drop 50%, that means there's some other bigger fundamental issues going on. You may not have a job if we're dropping 50%. There's all these other worse things that could be happening. And so I think now that people are starting to, once it turns the corner, it really starts to catch on. And people go, oh, there's a lot of people coming through now. And that's what sort of excites them. I'm surprised with how quickly it changed, though. That's the biggest thing that got me. I knew that this was eventually going to come. I didn't think it was going to happen this quickly.
The same, the market going in the negative direction. When the handbrake was thrown up, it happened quicker than I thought. When the handbrake was put down, it's happened quicker than what I'd thought. But I think people can't. It goes back to good old, I don't know what you'd call it, but food and shelter are, you just don't mess with those things, and we've never really seen much more of a correction than what we've just seen. So I think there's sensitivity around that, but it's still a roof over your head. And a really, really cool client of mine reminded me the other day. He's like, Mark, you've always said it, known you forever. You've always said it doubles every 10 years. It just does. And in the last 30 years, we have seen it's just doubled on average every 10 years. That's an average. But I know we've had a 20% discount, but it's the fundamental fact that it's shelter. You can see the push-on effects of what it does to the rental market when prices correct, less investors get into the market, rents go up, suddenly rents going up, suddenly investors are interested. There's so many more knock-on effects that we don't calculate, but shelter and food are so important. People are not going to set them aside and abstain for 5 years.
Yeah, I agree. And I've got a question for you. So I've been doing this now 7 years, and ever since I started in real estate, there seems to be extreme volatility in the market. Like you said, on average, year on year goes up doubles every 10 years, but it's not like it's a linear curve like that. It goes like this on the way up. And I'm very curious. The past 7 years I've seen this, it just seems to be going from boom to bust. The market's either booming or everyone's like, oh, it's crashing. There doesn't seem to be this steady couple of years. Yeah, it's slowly on the way up and sort of moseying along. Has it always been like that over, let's say, the past 30 years where it's 10 years, yes, it's an average going up like this, or has it always sort of been boom to bust in the short term? Or is this more volatile now than ever?
Look, the fact is, and it is fact, it's graphable. I've got it on a graph. I can show you.
Yeah.
And to answer your question long term, it's the growth, and we're talking growth. We're not talking Bitcoin. It's now like it's not that aggressive. The fact is it's up and down, but if you take an average, it just flat lines towards that. But where people most get caught up on, and I think this is important when we are today, if you've just tuned in, talking about open house numbers being bananas at the moment. The fact is that that if it bleeds, it reads. So it's so sensationalized in the moment that you almost don't know what to think because, you know, right? So, you know, I think people that take that calm, that it's done this over 30 years approach, for whatever the thousands of reasons are that it does that, seem to be better. People that get caught up in that hype of that week, that month, that day of the interest rate rise seem to be more adversely affected. It's almost like they're forever running. It's like, fire, run, and they run in that direction, then fire, run, and then they run in that direction, where that sturdy business person, family or whatever, you know, they just hold it for 10, 20, 30 years and you're sitting opposite them selling their property 30 years later and you think they're a genius, but they've just done nothing. But I think that hype, Michael, is a much bigger roller coaster than the reality.
Yeah, I agree. And I think that's sort of pushed along by social media. I think just in general, everything at the moment, information so much more accessible. And even if it's slightly distorted and over-pushed in terms of what people believe, or volatile. Yeah, I'd agree with you, Luke. But yeah, it's very interesting. And guys, yeah, the corners turn so quickly with this now as well. And we see the momentum as well. Everyone wants to now jump on, grab the bargain because they've seen the bottom of the market come and go. They go, well, I've got to make sure I grab it now when it's still cheap. And we've seen it happen time and time again. As soon as that starts happening now, there's competition, and we're starting to see that competition, and that's what's going to fuel this future price growth. Not the interest rates, not any of the other stuff that might be happening. It's purely supply and demand, and right now there is demand for property with buyers.
And just to qualify you, Michael, for anyone who's watching, there's 600 agents on the northern beaches. Michael is dealing with more buyers than any other agent or agency by numbers on realestate.com than anyone. So your reference to what buyers are doing, what buyers are saying, open house attendees and stuff is super, super strong. I actually think that in Sydney and in New South Wales, there wouldn't be many guys seeing as many buyers and talking to as many buyers as Michael that's on the screen at the moment. So it's really interesting hearing what you got to say.
It's a lovely plug.
You like that rap?
That was a great rap.
That was a good rap. Yeah.
But look, we are speaking to a lot of people on the ground as well. It's not like we're just speaking with one or two buyers, and this is industry-wide or Novak-wide as well, where there's a lot of people we're speaking with. And I start to see the exact same things week in, week out now as well. Like to give you guys an idea, 3 months ago, we started to feel it on the ground. And I was saying to buyers, guys, I think we're starting to hit the bottom of it now. There's more people coming through. There seems to be more positive sentiment out there. And the buyers were like, oh, no, what are you talking about? The market's still dropping. The market's still dropping. We're not going to believe the agent telling us that. Of course the agent's going to tell us that. Now, I have the exact same conversation. People that go, look around the open home. Ooh, yeah, we're starting to notice that too. So now it's all of a sudden not the agent trying to have to convince them. They're seeing it for themselves. And that's what's sort of fueling it and pushing it further.
What was interesting is we started seeing the numbers in January, as soon as we came back out of into the new year. And what the industry was reporting was that, no, this is just a lot of people with, you know, the ambition of buying a property, New Year's resolution, and there's just no stock because it's just that time of year. But it actually pushed through that. And that's when everyone was like, ooh, into February, there wasn't much more stock and the more buyers were still coming through. Into March, and then people going, maybe this is real. And then now April, and then these deals start happening at higher prices, more and more and more people coming through open houses, and people are going, nah, I was wrong in January. This is not about, you know, stock coming on after New Year's Eve or stock, you know, it's real.
Yeah, and bear in mind, guys, we're not trying to spin it to push hype and all that as well. The bottom line is fact. There were properties at the end of last year that we were not able to sell for a particular price. That moving into the early month of this year, we sold at higher offers, at higher prices that we could physically get from the market at the end of last year. That was genuinely what was happening with us on the ground. And to give you guys a little bit of context in terms of open numbers, to give a little bit of a gauge. When the market was bottoming out or on the way down as well, on an open home on a Saturday, which is our busiest day, some properties were getting 0 groups through, and the highest properties were getting maybe 5, 6, 7 groups through maximum. That was on a Saturday, our busiest day of the week. Now,
These are good numbers.
as an average, we're probably seeing about 20 to 25 buyers coming through open homes, some in the teens, some as high as we've had as 50 plus as well. So open numbers have probably on average close to tripled, quadrupled from when the market was going down. And to give you guys more context, the numbers I just reported then, that's very similar numbers to what we were getting at the peak of the market after COVID in 2021. So it's really interesting to see when we're gauging it like that, that if we're getting the same numbers when the market was peaking, what's that going to do to prices now? Yes, there's lots of other factors at play as well, but just purely on the numbers.
You know what, guys and girls, we're not sorcerers. We can't tell the future. We're just telling you exactly what's happening at the moment on the ground, what you're seeing. You're an excellent reference point, Michael, to share all your information today. And fingers crossed for the next 3 quarters of the year. Certainly this quarter, promising.
Awesome. Thank you, Mark. Thank you, guys.
Thanks, Legend. Have a great day.
You too. Cheers.
So everyone, I hope we helped you today with this information. Any questions or any stories you want us to run? We're approaching episode 1000. Let us know and we'll run it. We were just talking about what we're doing for episode 1000, Michael. We've got to put our thinking caps on.
We've got to do a big one for 1000. Something special. Can hear you guys' thoughts.
See you. Have a great day.
Cheers.
Bye.